Welcome everybody to another video of the IPO Analysis series by Choice Broking Limited. I am Yug Tibrewal, Fundamental Research Analyst, and today we will be talking about the IPO of Rolex Rings Ltd. Rolex Rings Ltd started its manufacturing operations in 1988. Since then, they have become one of the largest suppliers of machined and forged bearing rings and automotive components. They have 3 manufacturing plants located in Rajkot, Gujarat, with a combined capacity of over 140,000 metric tons per annum. In terms of installed capacity, the company is among the top 5 forging manufacturers in India. They are suppliers to leading bearing manufacturers and auto component companies like SKF, Schaeffler and Timken India. The company also derives 55% of their revenue from their global operations, where they export to 60 clients in 17 countries. Rolex Rings derives 60% of their revenue from bearing rings. The bearings market in India has seen a growth rate of 10% over the last 5 years, and we expect that this trend will continue over the next 5 as well. So at present, around 40% of the demand for bearing rings in India is satisfied through imports from other countries. With an increasing focus on domestic manufacturing and an overall growth in the underlying market for bearings, we expect a large manufacturer like Rolex Rings to benefit from the situation. The company makes around 40% of their revenue from the auto components industry, which is in a similar situation where a large portion of the demand is satisfied through imports. This we expect to change as the importance of localization in the country is growing. And we expect the overall market for the auto components to grow at a rate of 12% per annum. The products that the company sells are considered commoditized, which means that they don't command a very high margin. So the way to increase profitability in this situation is to sell a higher volume. If the company is not able to maximize their volume and utilize entire capacity, their profit margins will be affected. The company is an intermediate supplier of components to other industries. This means that if there is a rise in the cost of raw materials like steel or fuel, Rolex Rings might not be able to pass on the cost to their customers. This can have an effect on their profitability. Also, the company makes a large portion of their revenue from exports. So any negative movement in foreign exchange rates can also have an impact. The company has entered into a CDR arrangement. Now CDR stands for Corporate Debt Restructuring. This is when a borrower approaches lenders when they are unable to pay back their loans to restructure the debt. Rolex Rings has such an arrangement with their lenders because they were unable to pay back their loans and they entered into a CDR arrangement in 2013. Afterwards, there were certain restrictions placed on the operations of the company with respect to their cash flows and what they are allowed to do and not do. The promoters of the company were also required to pledge their shareholdings as per the details of the CDR. As of FY21, there is still around 34 crore of the CDR amount yet to be repaid, which is expected to be done by 2022. After that, the company will have more flexibility in its operations and have more freedom to do what it needs to do. Additionally, the company had delayed financial payments in 2018 and 19. While they were eventually able to pay the dues, it is a concern that they were not able to generate enough cash flow from normal operations in the correct time. Now, as for the financial performance, the company recorded a negative revenue growth of -7.7% from FY18 to 21. This is mostly attributed to an economic downturn in the period and the pandemic at the end of it. The EBITDA margins of the company saw a reduction during FY18 to 21 from around 20% to 18%. This was largely on account of lower sales volumes. The net profit margin of the company saw a sudden rise in FY21 to 14% from an average of 8%. This was largely due to a tax credit received by the company in the same year. The IPO is priced at a band of 880 rupees to 900 rupees. The issue opens on the 28th of July and closes on the 30th of July. The lot size is 16 shares per lot and a total application amount of 14,400 rupees at the higher price band. Rolex Rings plans to raise 731 crore rupees from the IPO. 675 crore rupees will be the OFS portion and 56 crore will be the fresh issue. The company will not be receiving any money from its OFS portion. The company plans to utilize the proceeds from the fresh issue to fund its long-term working capital requirements and for general corporate purposes. At the higher price band of 900 rupees, the company is demanding an EV to sales multiple of 4.3, which is at a premium to its peers which typically trade at 3.9x. The company has various risks that we've already discussed, such as the possibility of low capacity utilization, rising raw material prices, foreign exchange rate fluctuations, and its past history with defaults. While the outlook for the bearing rings industries and the auto component industries remains positive, the higher valuations demanded by the company remain a concern to us. Thus, we would recommend investors to subscribe to this issue with caution. If you found our video helpful today, remember to like and subscribe to the channel as well. Thank you for watching and we will see you again soon.